Welcome to the October 7th, 2024 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. This week, big news in the Middle East, of course. You can see right here, this was on Tuesday, the 181 ballistic missiles fired by Iran to the capital and military sites in Israel. This escalation has direct impacts, and I'll show you some of the impacts and I'll show you some of the surprises as the trading activity unfolded this week. Here, oil was 66. Here, oil is 75. A double-digit increase in the price of oil this week because we're pretty sure that the Israelis have figured out that Iranian oil is flammable. Now, couple of things. They said a proportional response in Washington. That's what the Biden administration said. They also said Israel has the right to defend itself. Now, that's like if you and a buddy are going to dinner with your wives, you walk in and two guys are pounding on him. Well, you grab a chair and you get him out of danger. You don't say, hey, you've got the right to defend yourself. So, anyway, proportional response requested by Washington. That would be 181 Israeli ballistic missiles targeted at the leadership, the nuclear sites, and yes, the oil infrastructure. Iran exports about 2 million barrels a day. Well, if that's taken offline, the global oil supply would be in a deficit of about 2 million barrels. It's essentially equilibrium right now, plus or minus whatever OPEC does. Here's the longer-term history of oil storage. Now, I was surprised when oil went to 66. We've been covering this graph with you. Cushing is basically the center of oil storage, at least for this part of the nation. And it's likely the biggest, or one of the biggest, if not the biggest. You can see back here, a little context on where we are with oil surplus or oil deficit. Back in 2014, the shale revolution took hold. There were 20 million barrels at Cushing, which is about their minimum to operate because you got sludge in there. Well, shale revolution overwhelms the world with global oil supply, and boom, Cushing goes to 69 billion barrels in storage. About 2014, during 2014, early 2015, we really got completely out of energy infrastructure because the oversupply caused oil prices to crack down below 100. We got back in a little too soon right here in 2018, but you notice Cushing went down to just above 20 million barrels. In the pandemic, went 65 million barrels of stored oil, and then 2022 back down to about 20 million. It's resting right now just below 24 million barrels. That's a very low storage for Cushing's history. That says we're not oversupplied on oil, and it underscores the energy infrastructure. And we're going to talk about a couple of other things that are affecting the energy infrastructure assets, which happen to pay a good dividend, right? Not a recommendation for your portfolio till you come down and get a plan. The Dow, this was a surprising reaction this week, all right? This is September right here, and this is early October, right? Actually, the Dow finishes the week above 42,000 with a little distance. There was less than a 0.75% decrease in U.S. equity prices overall at the lows of the week. That's surprisingly resilient. Back in the decades past, if there was Middle East escalation, boom, you'd lose 5% or 10% on the market. You'd have a small correction or an official correction because of the geopolitical risks of escalation. Not so this time, and I'm going to show you one of the reasons why. But the Dow finishes the week almost just above where it started the week. And that is surprising resilience. There is a reason coming up. Interest rates. All right. T-bills, 90-day T-bills. You'll notice back In October of 23, a year ago, 5.3. That's about the Fed's target for the Fed funds overnight bank lending rate. Then before the cut, it told you they were going to cut by a half. That's why we were able to tell you. That's why you subscribe. I'm Spencer McGowan, your financial weatherman, with your weekly update. I am also president, McGowan Group Wealth Management, a dedicated team of 11. Been busy all week long scouring the data and the markets to help you make great decisions. So subscribe, give us a like if you like it, and 4.5% on that T-bill. You know what that tells you? They're likely to cut by 0.5% at the next meeting, November 7th announcement, right the day after the election, so it won't be accused of being political. And then they have another meeting December 18th, and that could be 0.25%. But the jobs report came in. Goldilocks economy, 254,000 net new jobs in the month of September. What is that not? It's not a recession. Irony here, the 10-year Treasury was about 5% last October, an inverted yield curve. Went all the way down to 3.6. At the lowest point, it was actually 3.5. That was a 1.5% cut, and it carried over into the mortgage market. We were telling our clients that we're thinking about locking a rate. It's like, you already got your cut. The Fed's going to have to cut a lot before that rate can go down. And sure enough, look at that. The jobs report spiked it too. This is the yield curve becoming more normal. You've heard inverted yield curve. That means there's going to be a recession. Well, a more normal yield curve would be these rates about inflation, which is about 2.5%. And then you might get a premium of, say, 3.5%. But the 10-year Treasury this week spiked all the way to 4%. And that 30-year Treasury, those two rates could actually rise. As the short rates fall, stand on your head to get a picture of that one. All right, this is natural gas. So natural gas spiked, big discussions on data center demand. And natural gas was just rocking along the bottom here, $1.40 back in 2020, 5-year chart. And it went kind of down to about $1.40 this year. It was an oversupply, and a lot of the liquid natural gas export facility approvals were delayed. Those may be working their way through, but data center demand right here in the U.S., and it is increasing already the flow of natural gas, which is the primary source for electricity. There's other sources that we've considered there too. I wanted to put oil in a 5-year perspective. So back in 2019, you're about $50 a barrel. Then we had the pandemic. You hit minus 40. If you had a storage tank, they'd pay you 40 bucks a barrel to put it in there, I guess, at the low point. Then, and you should have filled up because look, 130. That's the Russian invasion of Ukraine. And here we descended to 66, as I mentioned before. Now we're 75. The question being, is there a supply disruption that could go higher? Goldman Sachs said this week could be $95. OPEC said if you cheaters don't stop overproducing, then we're going to take the price to 50. That's what OPEC said. Goldman said this could take it to 95. But it underscores the value of energy infrastructure assets. Now, what about blue chip dividend companies? We love getting paid. And our global high yield pays a big old dividend from interest income. Our blue chip dividend stocks cause us to watch the S&P 500 as the earnings unfold. We'll bring it to you each week. Well, we only have 22 companies out of 500 in this reporting season so far. So October's really earnings season. But the 22 that have reported 18% profits over last year. That is a healthy growth rate. And it's projected to be double digits for the foreseeable quarters. That's actually the underpinnings of a bull market cycle. And it tells you one of the reasons that things may get overpriced. We are in harvest mode when things spike, so we can raise tactical safety to keep those model portfolios ready for the next correction. Thank you for tuning in. Go to networthradio.com. You can contact us there. Set your time for a brainstorming session to update your plan for 2025. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.